Hello, guys. This is Gerard from Creative Minds.
How's it going, man? It's Emilio from Creative Minds.
Hey, what's up, y'all? It's Brian. What's going?
Hey, guys. How you guys doing? How was the week? I mean, how did you guys spend the week? Anything new or what's happening in the space of cryptocurrency and stocks?
Yeah, well, a few things, just different investments, different coins, stuff will happen with crypto, but yeah, that's it.
Brian, anything
Yeah,
new from your end?
my crypto.com, my crypto.com platform. They took a little L this week. Lost about $15 million worth of Ethereum got hacked, and then Bitcoin took like $10 million worth of that. Get some
Wow.
little, hackers. They want to try to see what. Yeah,
Yeah,
they got all
that's
over there.
that's a lot of that's a lot of currency there to just disappear in a. I mean, we have said before, right, that investing is risk. It's volatile. Being on cryptocurrency platforms, right? Because there's very little regulation. Anyway, a hack is a hack. Even companies that are highly regulated that are on the stock, they still get hacked. And I still remember when Sony, the studio, got that's thousands of employees, Cover City, and lost a lot of IP. Nobody that's shielded any hack. So really, cryptocurrency getting hacked, I am not surprised because any company that is out there that is doing big things is always a very high target for hackers,
Yes,
right? So
yes.
that's just something
Yes,
that
indeed.
cannot, right? So
And
what's happening? Really, go
well,
ahead.
the flip side of that is that all the 400 users that got stolen, all the 15 million, is that they all got fully reimbursed. So that's the beauty of it, that
Yep.
at least the CEO of Crypto.com was, able to
Yeah,
reimburse all that, you know.
that is good news for you, Brian. Now with your cryptocurrency and crypto.com, that is very good.
Yes, indeed.
I mean, yes,
I'm glad I didn't keep my stuff.
yeah. Now, definitely things that are good, right? But today we are going to shift gears and talk a little bit more about the stock market. And basically, again, the stock market is not shielded from hacks, or the companies, right, are not shielded from hacks. But we are going to talk about the stock market today, and we are going to talk about growth stocks as well as dividend stocks. Now, these are two types of stocks that a lot of people probably who are investing might be familiar with or might not be familiar. But from my end, when I started doing some investing, I honestly had no clue what an ETF was. I was really overwhelmed when it comes to, even how the stock market works. I didn't understand what it means to, go to a platform or go to a brokerage, money and buy stocks. It was just a little bit too much of a process for me. That Robinhood came, the Cash App came, that made things much more easy. But now we are going to be talking about growth stocks and dividend stocks. From your perspective, Emilio, what's your experience with these two type of stocks?
Well, yeah, there's a big difference between the two stocks. One that's gonna give you money in the back end, as far as like every quarter or every other month, depending on which you get.
Yeah,
If you get like your growth stocks, then of course it's a long term. Is you're gonna get it once you cash out. So those are the two differences. But yeah, I mean, the only thing I can say right now is for the newcomer. I can see how they could get discouraged with what's going on right now with crypto.com. But let me tell you something for myself, and I'll only speak for myself. Is that whenever I'm gonna start any investment, is I go in with a mindset that at any time I could lose my money. It's a risk factor,
Yeah.
right?
Yep. Yeah.
So crypto.com for me, I'm behind it 100%, no matter what. You know what I mean? Because it's the beginning for it as a company, as a platform, and it's just a setback for a great comeback. Remember that.
I
It's a
like that.
setback for a great comeback.
I like that.
Like it's like the saying goes: you get knocked down 4 times, you get back up the fifth. That's me. I can get knocked down 4, I'm gonna get off on the fifth. Like unless it's the Matrix and that's over. That's it. Other than that, we're gonna keep coming back. But it, when you look at
That is definitely
crypto.com, yeah, like when you look at crypto.com, it's they already planted their flag, no matter what. Like they planted their flag on the most known, arena in the world, which is the Staples Center. To knock out something like that even for myself, I'm an Angelino myself. To know something like that, and I'm not a Lakers fan. I'm not like, but to know something like that somebody that a place that has got their name knocked off like that, which is Staples Center. All it takes is that money. All it takes,
yeah.
and now it's crypto.com arena. That's crazy. Think about that. Let that sink in for a minute.
That's huge,
Let that
man.
sink in for a minute.
That's huge.
They planted their flag. Yeah, of
Yeah.
course. They planted their flag. And what is that telling you? That they're going to be here for the next 15, 20 years.
They are here to
So
stay.
no matter what happens, what happened, they're here to stay. And
Absolutely.
that's where I stand.
Brian,
You get me?
I'll see you, Emilio. Brian, tell us something, right? Growth stocks and dividend stocks. Now, these are two stocks that you are going to be enlightened more about from a high level. What's your experience with these two type of stocks?
So the stocks are going to be basically chip stocks that everybody is going to be comfortable with investment in. So of course, the FANG, which is your Facebook, Amazon, Apple, Google, and Netflix. So all you're going to know on planet Earth, everybody is using one of those from those companies. You have an iPhone, Apple phone, Android. You're gonna be into one of those different Facebook and any of those things. So those are your king of the hill top of stocks. Those are going to grow, blow up wildly or. And on the flip side of it, you got not a lot of people I counter know about those because they're not sexy, they're not really advertised that you can create a passive income. Most of the people on Wall Street, they'll just tell you, no, go buy Facebook, buy Netflix. That's it. They won't talk any of the other stocks, but that new investors should be into these smaller bundle stocks versus just buying one stock and then that's go up or down on you, and then you lose all your money or you sell just because you get scared. Like these are the kind of education that we're trying to get out to everybody, that you don't have to invest in only growth. There are other options in the stock market that are very non-volatile, kind of same price, and you can create a passive.
There's also the other flip side for dividend stocks, right? That popular, they're just so quiet, and a lot of people do not know about them. Now, on a very, very, very high level, what are some of those stocks considered dividend stocks? And this is just right before we have discussion, later on.
So I would tell everybody like unknown stocks that you might hear of: QILD, RYLD, and SCHD, the monthly dividend stocks, and SCHD is a dividend stock. The most popular dividend stock is a single stock, which I'm kind of sure is AT&T. They've had at least ever since their inception, they've constantly increased their dividend every year. to shareholders, and they're just returning the product to the shareholders, saying, "Hey, thank you for investing in us. Thank you for believing in us. We're going to provide you this paycheck. Live off of that." That's created a passive income source. Something you don't got to go to work for. It's something you just hold the stock, pass it on to your grandkids, kids, and then stays in the family.
Now, the aspect of the passive income, right? That's why we are here to actually talk about ways that people can get really great. It's a great way for you to be able to accumulate cash and reinvest it on your own terms, right? So these stocks are paying you and you are accumulating this, and you can actually take that cash and buy again, which makes your portfolio to grow. So I am very excited really for the, that you are going to be giving us, Brian. If we take our very, very brief break, we always want to invite our audience to, drop us a comment, let us know if you have any questions, if you have any feedback or anything that you would like for us to discuss. But until then, we also invite anybody or any of our business partners who will showcase. Let us know and we can always have a chat. But until then, we are going to be back in 60 seconds. Welcome back, everyone. This is Creative Minds again, here with Emilio and Brian. And this is our second segment of the show where Brian, some sort of a high level, or should I say, a high level deep dive of what growth stocks and dividend stocks are. Let me pass it on to you.
Okay. Thanks, Drew. So everybody knows what buying Netflix is going to give you. Netflix right now probably around $600 or something like that. Netflix could be $700 by tomorrow. Now with these, and that's just the power of a highly volatile stock like that, and that's a blue chip stock. With these dividend stocks, they're not going to moon like that. They're just going to stay kind of consistent. They're going to pay you out of passive income, depending on the style of the dividend, whether it be quarterly or monthly. So I'm going to give you guys an example of what we got one right here, which is QYLD. QYLD is a basket of stocks that pays a monthly dividend every month to the people that invest to it. The current price of QYLD, for example, is $20.91. Market is a little volatile right now, so just bear with me. So you can see, so for any dividend stock that you want to see that pays, you just go simply to NASDAQ.com. NASDAQ.com details the history of any dividend stock and when it's going to pay out, the time that it's going to declare its payment to the shareholders, and also tell you when you're going to record your payment date. So just as an example, on this page, we already see we got QYLD. Now we can go and see the last time a dividend was paid. So usually the way a dividend stock, you just purchase the dividend, hold it inside of your brokerage account, and then the company is going to come up with this declaration date. That'll be the first thing. And they're going to declare the dividend, the amount that they're going to pay for whatever month we're in. So for the month of December, they declared a dividend of 49 cents on December 29th. The ex-dividend date, every stock that pays a dividend has an ex-dividend date. The ex-dividend date is basically saying, hey, have your shares bought, paid paid for, sitting in your account, and then the ex-dividend date, they're going to record all the shares that are in everybody's brokerage account, and that will be your ex-dividend date. And then it's going to have your record date over here, and then the final payment date will be the day that it pays out the actual dividend. And so, just an example, so if you held 100 shares of QYLD before December 30th, it'll come out to at least $149. You got 100 shares times 49 cents. That's $49 easily, and that's every month that you're going to be generating that passive income. Now, now QYLD's dividend is at least up 10%. Think about the money that you have sitting inside of your savings account, CD account. They're giving you anywhere from 0.15 to 0.25, or just plain old nothing. They're literally robbing you every month. But you can take that same cash that you have sitting inside of the savings account, put it into the stock market, and buy a dividend stock and make your true interest that you should be making inside of the stock market. The stock market is a return on your money by investing in these dividend stocks. And that's just one. This is just the one I prefer to tell everybody. And so again, just another example, I'm going to show you guys. You can find this on any website right here. You can check. I like to tell people, check the 5-year history of a stock to see where it's been at. So for example, QYLD, we're looking at 5-year chart right here. So back in 2017, QYLD, I tell everybody it's going to stay anywhere from about $20 to maybe about $22. And it's just going to hover right there. No matter what, you're going to get that dividend as long as you hold on to the stock, no matter what. Yeah. So as an example right here, you can see 2017, QYLD was $23. And then we're just going to ride the wave all the way up to 2022, where we're at right now. To kind of stay consistent, a couple of little dips here and there, $24, $22, I don't know what happened right here. A couple of little stock market crashes or resets right here. But you see how the important thing I'm trying to point out is that the amount of money is going to stay consistent in the stock. But no matter what, all that time, as long as you hold the dividend, hold the stock and don't sell, they're going to pay you a passive income every month based off of the stock. And see, we're getting up here to 2019, 2020. Everybody knows what happened in 2020, the big stock market crash. That's when everything kind of dipped for the entire market. Still, QYLD, the lowest that it got to was $18.55. I'm sorry, $18.55. And then what did it do after that? It recovered. See how it went back up, stayed steady. People got their money back. But the main thing is that they kept getting that dividend no matter what, even their portion. This was me. I was holding QYLD while the stock market crashed last year, and I just ate up the dividends. The price, was it lowered, but it came back up and recovered, and then we're right here again, back to its normal level. So if you're worried about your money being lost in the stock, these stocks are going to stay very consistent most of the time. They have an exact payout method. If one of the stocks inside of this ETF does bad, the company that owns it will remove that stock and put a better playing stock into it, and to ensure that it maintains the stability inside of the stock. Now that's just QYLD, and that's a monthly paying dividend stock. So you can see the chart history. Always go back and do your research on the stability of the stock. And I just showed you guys 5 years of consistency of $20 to about $23, and it's right in there. But you've gotten a dividend for the entire time of having it. Another good stock I like to tell people about is AT&T. AT&T, it's pretty much a cell phone company, providing internet, wireless service. This is one of the most popular dividend stocks of all time because they always increase their dividend every year. On record, it's always gone up. So if you just look at the history of AT&T, they have nothing but a steady rise and payback to the shareholders who own the stock. The only thing that's different about AT&T versus QYLD is this one is a quarterly dividend stock. So it's going to pay you every 3 months. But the dividend is going to be a lot higher. So same thing, same principle. You're going to be holding your shares in the wallet. Not your wallet. I'm thinking of crypto. in your brokerage account, and then they're just going to pay you that dividend based off how many shares you own. But it's going to be at a 3-rate month. I have a little bit of AT&T. I love monthly dividend stocks because I have monthly bills. So that's my preference. Some people aren't like this. Some people don't mind waiting 3 months to get paid. That's just me. So, but these are the
Yeah.
things that you should be looking for to create a passive income. Your money's not going to be going away, because if your money's sitting inside of your savings account, it's definitely eaten up by inflation because it's simply just not growing. I can guarantee every bank is following the exact same pattern of providing you less than nothing in 0.15, just like the standard that a bank is going to pay you. And you can have $10,000 in there, and they're still going to pay you, what, 10 cents a month, versus you coming over to the stock
Maybe
market,
less even.
putting your money there and actually getting paid what a decent return to keep up with inflation. Same thing. If your boss is not giving you that pay raise at work, invest in a dividend stock. Bring your money from last year into 2022 and keep that money rolling. And the more shares you own, the more it's just like giving yourself a pay raise every month by purchasing the new stock.
That's
So
dope.
that's
Exactly.
something that you're going to see the dividends. And there's nothing wrong with purchasing growth stocks. I just feel once a stock grows enough, like if you buy Netflix at $500 and it grows to 600, you're going to be there. You're going to have conflict about, should I sell this or wait for it to go more? It could drop the next day. Me, I'm going to think about selling that stock, but I'm going to roll it back into my dividend stock plays because I want to increase my passive income. Those huge moons from 500 to 600, they have maybe you can probably happen every maybe once a month or every other couple of years that a stock will boom like that. But a dividend stock, you're going to get that constant passive income coming for you. So that's something I want to share with everybody, so we can pass that on to our family and
Hey,
subscribers like that. So
this is why we actually started this show or this discussion, right, guys? I mean, it was because like we wanted to exchange ideas and exchange knowledge or what we know about, ways of making income. And this is really a good example of how we can go about having the little monies. That way we can actually
that's right.
collect and redeploy it back into the
Yep.
market on our own terms, right? So, hey, thank you so much. This is really awesome. Emilio, any feedback, any, comment before we take our regular break?
No, I just think that it's great, man. And thank you, Brian, for being able to explain the certain details on how a dividend works, because it's something that I needed to understand in the beginning when I first started. And that was over a year ago, and
Hmm.
for people who don't understand, I hope they go back to this explanation and really understand and dive deep into what he's really saying. Because if you don't, then you won't understand what the dividend is, as far as like how it pays you and what it's paying you and how much
Hmm.
how much stock do you own in a company. But man, Brian, you did a great job on this, man,
Hmm.
for real.
Oh, thanks, y'all. Yep.
Thank you so much again.
Glad to share it too.
We are, yeah, we are going to take a second break. You're not going anywhere, Brian. Emilio, you're not going anywhere, but we are going to be here. But we are going to take a little
Right.
break, right, for our, our audience to, take a drink of water just to say we are going to be back in 60 seconds. Welcome back, guys. Creative Minds, where we chat everything around passive income. This is the segment where we are going to be turning to our discussion, feedback, or any questions from our audience. Unfortunately, we had somebody who sent us a question about, students, and I am going to put the question out here. Emilio, why don't you read it for us, or let us know what
Yeah, well,
audience is asking.
the question is, how do I buy a stock, and what's the minimum amount of stock that I should buy as a newcomer? And here's my answer for that. Well, for myself as a newcomer when I first started, because I can speak on myself, is I'm only gonna start with this amount of money. Which I started with like $50. I'm gonna start with $50. I'm gonna put it here, there, and I didn't know about diversification of a portfolio, but I did it anyways. And I diversified, which is I started with $1 in Apple, $1,
Yeah,
and it's just for your average person. Honestly, a person like me, I'm from South Central Los Angeles that don't. I had no financial literacy. Nobody explained to me anything. I had large amounts of money, and nobody explained to me, "Hey, you need to put your money here, there, and this A, B, C through Y through Z." Nobody. I had to learn myself. Through wasting money, through having money. So when it comes to it's very sensitive. Sensitive to myself. Uh, but I want to teach now. The knowing
yeah,
of like, hey, if you have $50, go ahead, put $1 here, put $1 there, whatever the case might be. But you know, it's just exciting. It's
absolutely.
exciting because when it comes to the dividends and the stocks, it's like, of course, you want to put where you're gonna get passive income, and it's the dividend stock.
Yeah,
But how Brian explained,
yeah,
you want to put your money where it's gonna give you money right back when you're asleep. Because if I go to sleep, I'm thinking about the next day.
yeah,
Like, damn, like what do I have to pay? What I gotta do? So you want to go to sleep knowing that somewhere out there there's money being made for you. But it's only on the effort that you put of how money you know, you want to put in these type of stocks or crypto. It all depends on that. Or all depends on how the hard work
absolutely.
that you want to put in. If I go to sleep today, I know that my money is gonna work somewhere in this universe. My money is working for me somehow, one way or another. I'm gonna sleep comfortably. I'm not gonna lie to you, 100%. I'm gonna sleep comfortable knowing that my money is working for me somewhere out there in the universe. It's working for me.
Yeah,
So
yeah,
my
yeah,
future is going there. It's being there.
yeah,
Because I started with just $1 in Apple, three
yeah.
dollars here, $5 there, $10 there. So with the dividend is something that now you know I'm learning more of. The more fractional shares that I own, the more fractional money I'm gonna get in return towards that. Just like Brian.
Revenue.
So I'm
Right, right.
very, you know, I'm happy where I'm at because I know where I'm gonna
Absolutely.
be. So Brian and Gerard, thank you
Yeah,
guys for
yeah,
for us being in the same you know channel and being able to
absolutely.
get whoever is trying to come and wants to learn.
Yeah,
That's it, man.
cool, cool. No, thank you, Emilio. Brian, I'm going to turn over to you, right? How, you said, how do I buy a stock and what's the minimum amount?
You know, well,
Just high level. What's still
you
out
got
there?
you can go. You can. I'll tell you, for the new investor, you can hop on. There's multiple apps that you can purchase stocks on. Robinhood, Fidelity, any of the stock trading apps that you'll see. You can go in there with $1 and simply get in and start making money immediately. Those dividend stocks, you don't have to purchase a full. I know QILD is $22 or $20. You don't have to purchase a full stock at a time. You can do fractional shares until you build up one stock. Then after
Yeah.
that, you're going to be earning the full amount of the dividend every month, no matter what. So just put in what you can. If you got to, not buy, a can of screwball that week, just put that money towards your, your stocks. If it takes you not eating out one week of the, one day out of that week, put that money into the stock market to actually grow. Pay yourself. Your money inside of your account, your savings account, is not being worked. That like that. That we got to get out of that mindset that your money has to be working, providing you a passive income at all time. Give your money a job. Whenever time I buy myself a stock, I think of myself as like the CEO or an employee of AT&T or Apple, or whatever.
Yeah.
Where's my paycheck? I want my paycheck this month, whether it be a dividend or me selling options. I want
Run
to
me
be
my
paid.
crypto or money.
The old days of you purchasing the stock and it's just sitting there forever. I want the money right now because that's the way everybody else is getting it. Like all these companies are making money by us purchasing their stock. They should be paying us back something. And that's what you get from the dividend stock. It builds you a passive income. They're paying you. Thank you for being an employee or purchasing, believing in my company. That's what I think of dividend stocks.
Absolutely. Buying stocks, there are so many ways these days, uh, from where you can buy stocks. You can either just go to a broker or you can go on. Everything is digital. You can buy stocks on Cash App.
Absolutely.
Robinhood, you can buy stocks on Robinhood. If you get even on Bank of America, Merrill Lynch, even exchanges, uh, Fidelity, Chase, all of personal banker, or or the person that you want to be able to invest in stocks, and they will direct you where to go, to create your account and then start trading. It's open for amount for a stock, right? So the caution goes up and down. People lose money. People invest what you feel comfortable that you are going to be able to be okay losing. Like what? Right? When you are putting your money, no disappear at any time. But the market has been good. You put your money long term, you can check historically. The market has consistently been going up. So the idea here is for any newcomer that is going in for the very first time, if you have no idea how the market works, buy a stock that you believe in, something that you see that people are using a lot, something that, or a good, or any company that you think is going to be there for the next 100 years. Buy the stock and let it sit, let it ride, especially if you don't know how to do, shorts and pulls or be able to, hedge, anything. All those terminologies, those big words really don't mean. You just need to be able to have that consist, have the heart to let your money sit and ride. Because the moment you start thinking about selling it, it's impossible to time the market. Impossible. Or otherwise, you would have people, crystal balls that know when the market is gonna dip. I really need to find one of those people, man. Because if I find one of those, I'll be very happy. But before we end our show, guys, any final words for the people that are going to be watching? A couple of seconds, for
Man, I mean, and just to piggyback off everything, just like I said, when I first started to begin in this journey, I had nobody, no financial literacy in this. I did it all by myself, like just going into it and diving with my own money into it, like just do it, and just going into your Robinhood, to your Cash App, whichever one, because I don't want to tell you which one to go to, but I've had people come into me, come in my circle and speak to me and tell me, hey, where should I do this and where should I do that? And I have helped already, a couple of people on where to start, and I helped them, through the phones, and this what I've done, this, this and that. Uh, but for those, just start it. $5 here, $5 there. Just that's my key to a success, is just start somewhere. No matter if you fall, get back up, and that's that. You know,
Absolutely. Absolutely.
that's it.
Thank
That's
you.
it.
Yep. Brian, anything? Last couple of seconds.
Oh yeah, yeah. I just tell people, just make that first step. Like you can be that first person in your family to be that thousandaire or that millionaire. Just don't leave it up to somebody else to do it. Like I tell people, why not you? Why don't you just do it? Like you out here working. You should be putting your money in a better place that's going to provide your family, generational line something. So you be that person. You invest.
Absolutely. Well, we have come to the end of our show, guys, and it's always a pleasure hanging out with the two of you. Right?
Yeah.
It's been a very interesting week, but we tell anybody out there that is watching, subscribe, like, share. Let us know what you think. We are very open. We want to be able to have guests, on our show. But until then, we just want to say thank you for watching our podcast, and we are going to be back next week with you all. So join us next week, and until then, it's goodbye from Creative Minds.
Peace.
Peace, y'all. Later.